How to Manage Personal Finances book, Chapter 5, Creating a Monthly Budget. This is Ken Boyd with the Accounting Accidentally Substack page. As an author's note, I'm posting the text version of this entire book on Substack, which you can see up here at the left, and video versions on a channel on YouTube, and you can find all the videos here grouped together in one place. You can email me for details on the publishing date in late 24 or early 25. So the only reliable way to fund a savings account is to create a monthly budget and stick to your budgeting plan. That way, you'll find ways to save money and budget for a savings account each month. You'll save because the amount is written down in your budget. It's a real thing. So it's time to introduce you to Sally, who you'll get to know throughout the book. Here's how Sally creates her monthly budget. You can do this in Excel, on a piece of paper, or with an app that I'll get to later. She sets up a budgeting template, and she writes her $6,000 after-tax monthly income, call it revenue, at the top of the page. She'll also write down categories for fixed expenses, variable expenses, and savings. Fixed expenses. Think about the fixed expenses, those that don't change, that you pay every month. That will likely include a home mortgage or rental payment, car payments, insurance premium payments. Let's assume that Sally's fixed expenses add up to $4,500. Variable expenses. Now you fit in your variable expenses and your savings into the remaining $1,500 of the budget. Variable expenses are the ones you have some control over. Rather than eat out 3 times a month, maybe you only go twice. Or another one, you brew coffee at home 3 days a week rather than buying it from Starbucks. Sally's variable expenses total $1,200. The savings account. Your monthly budget should include a monthly account for savings, a monthly amount. And the first thing you do each month is to pull that savings amount out and move it into a separate bank account, like a savings account. That way you don't spend it. As an example, 5%, Sally's monthly gross income, $6,000, is a saving balance of $300. So here's her budget. Revenue $6,000, fixed expenses $4,500, variable $1,200, savings $300. There's lots of mobile apps to create and manage a monthly budget. There's a link here where you can go in and read some reviews. The key is to plan your spending and review where you are a few times a month. Don't just do it at the end of the month, regardless of how you do it, whether you use an app, an Excel spreadsheet, or you simply write it down. Here's an example of the benefits of saving sooner rather than later. Actually, I've always lived frugally and saved a lot of my income so I don't need to work for a while. Wow. It was 1999. I was talking to a coworker, Ron, who was about 50 years old. A large insurance company where we both worked was merging with another firm, and we were both leaving the company. In fact, it was my last full-time job. I went on my own ever since then. I suspected that Ron lived well below his means because I had a good idea of how much money he made. Both Ron and his wife work, yet they lived in a blue-collar neighborhood with small homes. Ron wasn't retiring early, but he had enough money to take some time off. He told me that he and his wife had planned carefully financially so that neither one would need to start working immediately after leaving a job. They planned, they saved aggressively, and they invested wisely. This strategy can build wealth even in times of market volatility. The importance of emergency funds. So many people don't do this, and it's such a stress reliever. When you build and maintain an emergency fund, you can avoid borrowing money to pay for unexpected costs, and unexpected costs always happen. Here are 2 common expenses that need to be funded. Car repairs. We've all experienced this. In most places, you need a reliable car to get to and from work. Many people started working hybrid jobs during the pandemic, but they still need to go to the office a few days a week. Very common. And a car repair, generally speaking, can't be put off. Insurance co-payments. Most of us pay a portion of the bill for medications, doctor visits, and other medical costs. We may have to also pay a deductible. An illness or injury is usually unplanned, and so is the cost of co-payments, and you can add on deductibles. When you build an emergency fund, you have far less anxiety when unexpected costs come up. A car repair or a co-payment is frustrating, but having a fund to cover the costs will reduce your stress level. I'll talk about the importance of insurance later in the book. The dollars you use to fund a savings or investment fund can't be used for some other purpose. That's the key. This is a good time to talk about opportunity costs, which is in the next chapter. That's as far as we'll get for now. Remember that you can find the entire book on Substack. You can also find a video playlist on YouTube of all the videos for the book. Thanks for watching.